Hey folks, ever wondered how your colleague managed to retire early or how your neighbor bought that dream beach house? The answer lies in smart investments. Today, I'm going to reveal secrets that Wall Street gurus keep under wraps. In just a few minutes, you'll learn how to turn your hard-earned money into a money-making machine. Get ready to dive into the fascinating world of investing. Investing is crucial for three main reasons. First, it makes your money work for you, generating passive income. Second, it allows you to beat inflation, maintaining your money's purchasing power over time. And third, it harnesses the power of compound interest, where gains generate more gains, accelerating your wealth growth. Starting to invest early is the key to a solid financial future. Don't let your money sit idle. Put it to work. Stocks represent ownership in a company. When you buy stocks, you become a partial owner of the business. Stock prices fluctuate based on company performance and market conditions. To choose promising stocks, research the company's history, financial health, and growth prospects. Diversify across different sectors to reduce risk. Remember, investing in stocks requires patience and a long-term view. Regularly monitor the performance of the companies you invest in and be prepared to adjust your strategy when necessary. Don't put all your eggs in one basket. ETFs, or exchange-traded funds, are an excellent option for diversification. They work like a basket of assets, allowing you to invest in multiple companies or sectors with a single purchase. Popular ETFs for beginners include those tracking broad market indices like the S&P 500 or NASDAQ 100. They offer exposure to various sectors of the economy, reducing risk. Additionally, ETFs usually have lower fees than mutual funds, making them an attractive option for novice investors. They're a great way to start building a diversified portfolio. Mutual funds are professionally managed pools of money invested in a variety of assets. There are two main types, active and passive. Active funds have managers who try to outperform the market, while passive funds track a specific index. When choosing a fund, consider your investment goal, risk tolerance, and time horizon. Compare management fees, as they can significantly impact your long-term returns. Mutual funds are a great option for those seeking diversification and professional management. They can be an excellent way to gain exposure to a broad range of investments with a single purchase. Fixed income investments are crucial for balancing your portfolio. Treasury bonds are considered the safest, backed by the government. Corporate bonds offer potentially higher yields, but with more risk. CDs, certificates of deposit, are safe and offer fixed rates for a set period. For inflation protection, consider instruments like TIPS, Treasury Inflation Protected Securities. Fixed income provides stability and regular income to your portfolio, acting as a counterbalance to the volatility of stocks. To start, focus on diversification. Don't put all your eggs in one basket. Create a balanced portfolio that includes a mix of stocks, ETFs, mutual funds, and fixed income. The exact proportion will depend on your age, goals, and risk tolerance. A valuable tip: start with a low-cost online broker. They usually offer educational tools and reduced fees, ideal for beginners. Remember, the important thing is to start. Even small, regular investments can grow significantly over time thanks to compound interest. The best time to plant a tree was 20 years ago. The second best time is now. Beware of common pitfalls. First, watch out for high fees that can erode your gains. Second, avoid falling for investment fads or trying to time the market. Lastly, don't let short-term market fluctuations scare you. The key is to maintain consistency. Invest regularly, regardless of market conditions. This approach, known as dollar cost averaging, can help reduce the impact of volatility, stay the course, and focus on your long-term goals. Remember, the secret isn't getting rich overnight, but being consistent and patient. Start small, learn constantly, and watch your money grow. Don't postpone it, start today. Your dream retirement is closer than you think. With the strategies we've shared, you're on the right path to a solid financial future. Invest wisely, stay informed, and prepare to reap the rewards. Good luck with your investments, and here's to your financial success. Thank you for watching the video until the end. See you in the next video.